by somebody, I mean you, Virginia. What's the title of chapter 3? Encumbrances on real property. Look at the word encumbrances. Does it look kind of like the word encumber? Yeah, it looks kind of like the word encumber. What do I want you to know about the word encumbrance? An encumbrance, when we're talking about in regards to real estate, it is any burden on real property, any burden on title. An encumbrance is simply any burden on title. Now listen, we're going to call it a burden. Some of them are going to be worse than others, but we just need for you to be aware that this is anything that burdens real title, the title of real property, okay? They're going to fall into two great categories. At some point in the day, I'm going to remind you of this comment. We're going to talk in this chapter about liens, and I'll give you a definition of liens in just a moment. But liens are basically what a lender puts on your property when you borrow money. You borrow money, the bank wants collateral, right? So liens are in fact encumbrances, but all encumbrances are not liens. All liens are encumbrances, but not all encumbrances are liens. When we start talking about things that are encumbrances that are not liens, we will throw in stuff like your restrictive covenants. Restrictive covenants, it doesn't bother me that I have restrictive covenants. However, if I step out of line, I can be disciplined for that. So anything that burdens the title to real property is an encumbrance. We will talk about two categories, liens and everything else. Okay? So let's get started. First category of liens, I told you I would give you a definition of lien. Let me give you the working definition of lien, and then I'll give you more of a colloquial definition of lien. Here's my working definition of lien. A charge against property by contract. A charge against property by contract. A charge against property by contract. Okay? Now step back and visualize it. All right? I borrowed money from the bank to buy my house. You'll hear me mention this several times throughout the class. A lot of people say they're going to the bank to get a mortgage. You're not going to the bank to get a mortgage. You go to a bank to get money. Okay? I need money. Bank gives me money, but then they want what? Collateral. The bank wants collateral. The lien is the collateral. Your mortgage is the collateral, where you give up your property as collateral for a debt. So a lien is a charge against property by contract. What was the contract I entered into with the bank? I will pay you back at these terms, and if I stop paying you back, you can take my property and sell it and get your money back that way. A charge against property by contract. Can you visualize that? Okay. Within the category of liens, there are going to be two great categories of liens. There are going to be specific liens and there are going to be general liens. You can see on this first slide here, we're going to talk about specific liens. Let's make it easy and efficient. When we talk about specific liens, I want you to think about liens that are tied to a specific property. Okay? The lien is against that specific property. Notice in the category of specific liens, the first one that we mentioned is mortgage. Notice that we have the word deed of trust in parentheses up there. That word is going to be important to you later. Technically, North Carolina doesn't use the mortgage concept. We use what's known as a deed of trust to collateralize debt. When we get to chapter 14, we will go into the distinctions between those two. Just think of a deed of trust for right now as being a mortgage. I'll tell you the differences later. Okay? I borrowed money to buy my house at 1515 Sycamore Street. Okay? The bank loaned me money against 1515 Sycamore Street. If I don't pay my debt, what can the bank take? 1515 Sycamore Street. Not my other property. My lien is not against that. My lien is against this. Okay? That is a specific lien. You feel pretty good about that? We don't need to spend a lot of time on that. Let's move on to the next one. Your real property taxes. Your real property taxes are a specific lien as well. If I don't pay the real property taxes on 1515 Sycamore Street, then the government's going to come and take what? 1515 Sycamore Street. You're getting it now. Okay? Because it's a specific lien. It is specifically tied to that. I need to add a vocabulary word for you right here. Real property taxes. We'll talk a lot about that, but I'm assuming that the word special assessments is also up there. It is. I see it. Okay? Special assessment, for test purposes, I want you to be able to distinguish between what your real property taxes pay versus what special assessments pay. So let me give you a definition of special assessments that you can use throughout the class. A special assessment is a tax levy for a one-time improvement. A special assessment is a tax levy for a one-time improvement. Okay, we introduced the topic. Let's beat it up just a little bit, and let me tell you what to look out for as you're in regards to your understanding of special assessments. What real property taxes pay versus what special assessments pay. Let's go back to your real property taxes for just a moment. Your real property taxes, you are taxed on a local basis. Okay? Now, people throughout the state of North Carolina pay real property taxes, but they pay them in the county and the city where they live. Okay? So your real property taxes, do you know what your real property taxes go for, what they cover? Schools, the municipality, the courts, the fire stations, police stations, and things like that. Roads within the municipality. Your real property taxes are important for running your local municipality. All those services that you just named, I believe all of them fall within real property taxes. Okay? So you say, well then what is a special assessment? Special assessment, tax levy for a one-time improvement. The city brought you water and sewer lines. Okay? Before you had well and septic, the city brings you water and sewer lines and they say, hey, we would like for you to help us pay for the extension of these lines. They charge you a one-time fee. It could be substantial. I mean, it could be several thousands of dollars. But once you pay for the extension of those lines and it's paid for, it's done. You don't have to keep paying taxes on that any longer. And special assessments would only be charged to the people that they benefit. Think about that. Real property taxes are charged to everybody in the municipality, right? But your special assessments would only be charged to the people that they benefit. One time, once it's paid for. Now listen, once you get those water and sewer lines, I know you're now going to have a water and sewer bill, but that's paid for use, not for the extension of the lines. So think about this, special assessments, water and sewer lines. The city brings you sidewalks, asks you to help pay for them. The city pays a road in front of your house, asks you to pay for it. They're bringing you a service, they're asking you to pay for it. The other thing that will be important for test purposes is to understand how the city or municipality typically charges you for these special assessments. So what is the definition of special assessment? What type of projects might they be used for? And how are you billed on these? One common way of billing you would be based on how large a piece of property that you own. For example, water and sewer lines, you may end up having to pay based on your front footage. If your lot is wider than mine, you may end up having to pay more than me. It could be on acreage. If your lot's bigger than mine, maybe you end up having to pay more than. It could be based on assessed value or something like that. So just common ways that you might be charged for your special assessment. Now let me back up for just a moment again and let me remind you what you're studying. Do you understand why real property taxes and special assessments are a specific lien on your property? It only affects the property that has the taxes or the lien. Okay? And then, can you recognize the difference between real property taxes and a special assessment? What would special assessments I cover and how are they typically billed? That's what you're studying, and then you're moving on. Okay? Questions or comments on that? How did we get here? Specific liens, mortgages, real property taxes, and special assessments. That really was not that difficult to understand, right? All right. Well, let me give you something difficult to understand then. All right. It's getting too easy this afternoon. So let's go to this next topic, mechanics liens. Here's what I want you to write down about mechanics liens. A mechanics lien is a lien by a contractor who has done work on a property. A lien by a contractor who has done work on a property. And notice it falls under the category of specific lien, so it would be a lien against the property where the contractor has done the work. Okay, you say, well, wow, that was too simple. Why did Chris think that this was going to be complicated? right in the middle of a perfectly good lecture on specific liens, we're going to pause for just a second, and we're going to go have a foreclosure sale. So what in the world could possibly be the relation here? Give me a minute, and I will work back to how we got here. Right now, do you have a definition for mechanics lien, and do you trust me that it's a specific lien against property where the work was done? That's all you have so far, all right? As an aside, let's go have a foreclosure sale. Foreclosure sale. We are not there in the lecture. I'm bringing it up out of the blue, and here's why I'm bringing it up out of the blue. Foreclosure sale, somebody didn't pay their liens, right? They didn't pay for their mortgage. The bank said we have no other way to get our money except to foreclose on the property and take whatever we get at the foreclosure sale. So here's what's going to happen. At this particular foreclosure sale, at the finalization of the sale, the property ended up bringing $180,000. I am completely making this number up for this demonstration, okay? I didn't get it from anywhere, I made it up. The house sold for $180,000, okay? Now, if you have read ahead, you are probably going to miss my next question, but just bear with me on this. At a foreclosure sale, do you know the first thing that is paid at a foreclosure sale? See, some of you who read ahead are probably saying taxes, your real property taxes, and that seems like it would be the right answer, but it's actually not. Remember I said what's the first thing that's paid at a foreclosure sale, and the answer is the fees, the attorneys, the cost of sale. Think about it. The attorneys, it doesn't make sense for them to put a lien on the property because they would be way down here. So what they do is they say, I tell you what, we will handle the foreclosure sale, including the cost of sale, the court fees and stuff like that. We will just go ahead and take ours off the top. They're probably going to run somewhere around 5% of the sale or so. So at the foreclosure sale, the first thing that is going to be paid is going to be the cost of sale. C-O-S, cost of sale.
Can you flip that line? It's hard to see the board.
Okay?
Thank you.
More or less?
No,
Good?
it's good.
Okay. $9,000 cost of sale. Look, there's plenty of money to pay cost of sale, right? So that's good. Now, for those of you who read, it's time for you to be rewarded. What is the first lien that's always paid at a foreclosure sale? What's the first lien that's always paid? I heard somebody whisper. Real property taxes. Your real property taxes are so important for running your local municipality that at a foreclosure sale, they just take that off of the top and they send it directly to the municipality so that they have that money. This particular case right here, again, making these numbers up, I'm going to say that there was $5,000 worth of real property taxes. $5,000. I'm just going to put RPT. Excuse me, real property taxes. And again, this will come up in chapter 14, so we'll look more closely at it at that time. There's still plenty of money to pay those, right? Okay. Typically, the sale, the foreclosure sale, is going to be called by the first mortgage holder. Typically, they have the largest mortgage, and they're usually the ones that are not getting paid. So in this case, the person holding the first mortgage was owed $150,000. Okay? 150 plus 9 is 159, 164. Is there still enough money there? This is a good foreclosure sale so far. Everybody's getting paid. Oh, wait a minute. There's a second mortgage down here. This guy at some point in the past had taken out a second mortgage for $35,000, or at least he owes $35,000 on it. This mortgage was taken out on 6/15 of some particular year. All right, now let's see how good you are at math. 9,000 plus 5,000 plus 150 was 164. There was plenty of money, wasn't there? 35, what just happened? We now have a problem. We now have a problem. So I need you to add some notes to this. The first note I want you to add is the Connor Act. The Connor Act. I've actually seen it spelled two different ways. I usually spell it C-O-N-N-E-R. The Connor Act. And here's what I want you to write about the Connor Act. The Connor Act establishes lien priority. The Connor Act establishes lien priority. You'll often hear about the Connor Act. Connor Act makes North Carolina a pure race state in regards to lien recordation. And when I'm saying race, I'm saying race to the courthouse. The first one will win the race to the courthouse. A pure race state in regards to lien recordation. How does a first mortgage become a first mortgage? It's not because it's biggest and best. It's because it was recorded when? First. It's because it was recorded first. The Connor Act establishes lien priority, and the way that act establishes lien priority is through date and time of recordation of the document. Okay? Connor. Now, notice something that I mentioned to you a little bit earlier. There are a couple of things that kind of exempt from the Connor Act. They're not exempt, they're special exceptions to the Connor Act. Tell me one thing on that board up there that's an exception to the Connor Act. Well, remember, the first one is not a lien, it's a thing. What lien up there always has priority at a foreclosure sale?
Yes.
Your real property taxes, they actually defy the Connor Act, so to speak. Real property taxes always jump to the front of the line of liens, don't they? That sounds to me like it would be a point on the exam. Knowing that piece of information sounds very, very important to me, to know that real property taxes jump to the front of the liens. Okay? Now, let's talk about another word that I want you to understand, or another concept I want you to understand about foreclosures. I want you to write this down. The effect of a foreclosure sale, the effect of a foreclosure sale is that it clears inferior liens. The effect of a foreclosure sale is it clears inferior liens. And then look back at the board with me for just a moment. You know, it's always good to have lien priority, but there's never a more important time to have lien priority than at a foreclosure sale. Okay? Hey, as long as everybody's getting paid, I don't care what position I'm in. But when people stop paying, what do I mean by clearing inferior liens? If the first mortgage holder calls the foreclosure sale, what's going to happen to people below him if they don't get paid? What did the foreclosure sale do in regards to the title to the property? It cleared the title. I want you to listen closely to what I'm saying now. Did I say a foreclosure sale paid all liens? No. I said it cleared. Technically, it clears inferior liens. There, every once in a while on the test, you're looking at a problem and you think, well, this looks like a math problem. It may or may not be a math problem. Just because it has numbers in it doesn't make it a math problem. I saw one problem one time where I was reading through it, and I take out my pencil when I start scraping stuff up. And basically what the question ultimately was is, which of the following liens would be cleared from the title based on the foreclosure sale? And the answer was all of them, because it was called by the first mortgage holder, so it cleared all the rest of the liens. Connor Act, wouldn't you rather be first than second? And in this situation right here, you'd really rather be first, wouldn't you? Because there's not enough money to pay everybody. And you know what happens at the foreclosure sale? You get paid in the order of priority. In other words, it's not like somebody looks at it and says, well, that's not fair. This guy should get something. Let's take a little bit from him and get up. That's the significance of priority. You get paid. If there's anything left, it goes to the next guy. So now, 164, ultimately it sold for 180. How much is this second mortgage holder going to get? There's only $16,000 left. So that's all he's going to get today. I'm going to ask you a trick question right here that you can't be wrong on the answer. Is the second mortgage holder ever going to get the rest of his $19,000? What's my favorite answer in real estate? It depends. It depends. He's not getting it today. Okay? Does he have a right to continue to have a lien against the property?
No.
No, because the foreclosure sale cleared the liens from the title. So how's the only way that the second mortgage holder is going to be able to collect his money? He's going to end up having to file a lawsuit against the person who created the debt. Okay? So you just got foreclosed on, and the title was cleared, but you still owe, in this case, $19,000. Are you with me? What the lender is going to do is seek a deficiency judgment. Deficiency judgment. That will be your next vocabulary word. A deficiency judgment. After that story, deficiency judgment means exactly what it sounds like it means. The creditor has a right to go after you personally to collect the money. If a lender has a judgment against you, in this case a deficiency judgment, judgments can follow you for 10 years. So what that creditor is hoping is, at some point during that period of time, you get some other assets. Because if you get other assets, then maybe they can attach those assets. Or maybe you'll pay them. If you're ever trying to clear up your credit, maybe you'll pay them. So if the lender believes it's worthwhile, they will follow you for 10 years. And if you don't pay them in 10 years, if they really think they'll ever collect the money, they can actually renew their judgment for another 10 years. Okay? Now, let me remind you, how did we get this story started? We started talking about liens. Look, as long as everybody's getting paid, a lien is just a burden on the title, but it doesn't. I don't lose sleep at night about it. I don't lose sleep at night when I can't pay it. Because a lien gives the lien holder the right to do what? Come take the property and sell it at public auction to get their money back. And what do we call that process? A foreclosure sale. A lien foreclosure sale. Okay? Now, why did I tell you that property right now? Let's go back to our specific liens. I just talked to you about the contract, explained to you a little bit about how a foreclosure works. So now, let me tell you something significant about the mechanics lien. Do you understand that most contractors, when they start work, they can't finish the work that day? We have a painter right now at our house. He started work yesterday. It's going to take him a week to finish it. We had a contractor last year do some work on our bathroom. He started, he didn't finish till 2 months later. Okay? So what happens is, in North Carolina, we have a protection for contractors based on the fact that they don't normally start and finish their work the same day. That's the mechanics lien, or the Material Liens Act. I can't remember exactly what the name of the act is, but we're talking about mechanics lien, and that's what's significant, okay? There is a time frame involved. I need you to write this timeline down. I need you to write this timeline down. I'm making these numbers up. A contractor begins work on June 1st. Contractor begins work on June 1st. Let's refer to that as the first day of delivery of goods and services. June 1st is the first day of delivery of goods and services. Actually, goods or services. Let's make it simple. Let's say that I'm building a swimming pool. What would the first day of delivery of goods or services look like? They could bring some materials and drop them off on my property. Okay, that's deliveries. Or they could bring a backhoe out and start digging a hole. Either way, that is the first day of delivery of goods and services. Are you with me? Okay. Can the contractor finish building my swimming pool that day? No. It's going to take him 30 days. It's going to take him 30 days. He finishes that swimming pool on June 30th. He finishes on June 30th, okay? Let's refer to that as the last day of delivery of goods and services. Last day of delivery of goods and services. Okay, you know, most likely I have given him some money to start the work. Then he did the work, and he's going to bring me a bill. On June 30th, he walks up and he hands me a bill. The day that he hands me the bill, the last day of delivery of goods and services, the clock starts ticking. The clock, there's actually going to be 2 clocks, one for 120 days and another for 180 days. I want you to focus very sharply on the 120 days. From the last day of delivery of goods and services, a contractor has up to 120 days to record a valid lien. All right, I want you to be very specific right here. A contractor has how many days to record? 120 days. I'm not through yet though. 120 days from when? The last day of delivery of goods and services. Now, let's talk about why this is a little bit tricky. So wait a minute, Chris. What about that contract stuff? Wouldn't he be wise to record immediately, since the contract is based on date and time of recordation of lien? Wouldn't it make sense for him to run immediately to the register of deeds? Not a contractor, and here's why. If that contractor will record any time within 120 days of the last day of delivery of goods and services, his lien priority goes all the way back to when?
First day.
The first day of delivery of goods and services. Lien priority. Again, visualize it. Do you understand why this makes sense? It wouldn't be fair to penalize contractors based on their end date. They can start a job way back here, and then you could end up going, falling on hard times on money. It wouldn't be fair to penalize them. So what the mechanics lien statute basically says is this: if you'll record within how many days? From what day? The last day of delivery of goods and services, your lien priority will go all the way back to the first day of delivery of goods and services. Congratulations. That is the sole thing that you need to understand about a mechanics lien. Do you understand why it's a specific lien? Because it's a lien where they actually did the work. He built the swimming pool at 1515 Sycamore Street. The only place he can put his lien is where? 1515 Sycamore Street, okay? Do you understand that time frame? You are solid. Now, let's go back and talk about our foreclosure sale for just a moment. The second mortgage holder right here, he was having a bad day, wasn't he? But his day just got worse. Not only is he not going to collect $35,000, he's now not going to collect $16,000 because his priority is $615, right? What's the mechanics lien's priority, assuming that he recorded 6-1? Can a mechanics lien jump other liens? Even though it's not recorded until August, his lien priority is going to jump all the way back to June 1st. That $40,000 swimming pool is going to knock this guy down a little bit lower. Do you understand how the mechanics lien and real property taxes kind of defy the contract? That's really what we were going for in this demonstration. Mechanics lien, 120 from last day, lien priority, first day, and then understand that's our calendar. One last thing, you paid the money, so we might as well talk about the 180 days as long as we're here, even though you're not as likely to be tested on the 180 days. What's going to happen if the contractor, what's going to happen if I don't pay the contractor? Eventually he's going to want to file a suit against me, right? So the 180 days says this: if he needs to file a lawsuit, if the contractor needs to file a lawsuit to collect on his lien, he must do it within 180 days. Watch where the 180 days start. In other words, it's not like he records and then starts another 180 days. The 120 days is actually subsumed within the 180 days, all right? 120 days to record, right? 180 days if you have to file a lawsuit. You can't file a lawsuit unless you have previously done what? Recorded your mechanics lien. All right? That is the calendar of mechanics liens, and that's the extent of what you need to know. Would you like to look at an idea of what it might look like in a test question?
Yes.
Sure. Let's just take a look at it. One, it could just be a definition. Okay? But it could, if I want to ask you a complicated question about this, see what you think about this. A contractor begins work on a swimming pool on June 1st, which he promptly finishes on June 30th. He runs down to the Register of Deeds and he records on July 8th. Over which of the following liens would he have priority? Over which of the following liens would this mechanics lien have priority? Would he have priority over a properly recorded lien on 6/15? Yes. Why? Because he jumps all the way back to when? June 1st. Would he have priority over an unrecorded lien on 5/25? Someone loaned you money but they didn't record. He would have priority over that. He would have priority over that because it was never what? These people right here are going to be penalized by the contract. It's not against the law to not record. This is not a misdemeanor. if you don't record, you have no lien priority. Let's assume that this is like a second mortgage, okay? Don't confuse it by thinking this is another mechanics lien, right? This guy didn't record, he has no priority. Would he have priority over a properly recorded lien on May 30th? He would not have priority over that because it goes back prior to June 1st and it was properly recorded. You see what I'm talking about there from a test question standpoint? Let me show you one other thing that's kind of neat about this. You'll have one of these on your midterm as well, so that you'll have an idea of how this timeline works. A contractor begins work on a swimming pool on June 1st, which he promptly finishes on June 30th. Later that year, in December, he records a mechanics lien on the property. On what date will his lien priority be established? He started on 6/1, he finished on June 30th, he recorded on December the 7th. What date will his lien priority be established? It won't be. He has no lien, he has no right to a lien on this property. The 120 days acts as a statute of limitations. Now listen closely to what I'm saying. I'm not saying you don't owe the guy money, okay? I'm saying he doesn't have a right to put a lien on the house because he waited too long outside of the statutorily prescribed period, okay? You still owe money. If you don't pay him, he can file a deficiency, not a deficiency, he can go for a judgment against you if you don't pay him. He just doesn't have a lien on your house. You okay on that? All right. That's the deep stuff on here. Let me finish this slide out by saying this. Look at the last one on this page, the Commercial Real Estate Broker Lien Act. Every once in a while, I would like to encourage you. This is a tough class. There are a lot of tough words. Every once in a while, just look at the name of a law or an act and ask yourself, does that tell you 90% of what you need to know? The name of this act is a Commercial Real Estate Broker Lien Act. Does this act, do you think, apply to residential agents?
No.
Why do you think this doesn't apply to residential agents? Because it's the Commercial Broker Lien Act. Let me tell you the history of this act, which is not worth writing down. The history of this act is, do you understand a lot of commercial transactions take a long period of time? I mean, some of these things are going to cost, take 9, 12, 14, 18 months. Do you understand that a commercial transaction is oftentimes has a large commission that comes with it? I highly encourage you to go after large commissions whenever possible. Having said that, sometimes they are hard to get. I had a buddy of mine, he had I'll tell you this story at some point later. I had he wasn't a buddy at all. I didn't even know him. I just read the story about it, but it's a true story. He lost a $500,000 commission. Not a $500,000 sale. He lost a $500,000 commission because the paperwork was not filled out correctly. Sometimes commercial transactions spit out large commissions. What was going on, not a lot, but what would occasionally happen is as you get closer to closing, the seller may look at it and say, good gracious, I owe you $500,000, $700,000, $800,000. Would you take 110? You know, I'm not making as much as I thought. We had to pay the attorneys a bunch. Would you take 110? Well, you know, when it comes right down to it, basically what they're doing is saying, we'll give you less than what we had agreed to. Why? Because our attorneys are bigger.